But which stock is the better buy for investors? Let's ask Bernstein's Toni Sacconaghi. Has a market perform, price target of 195, alongside Piper's Brent Bracelin, who has a buy rating, a target of 455 for Microsoft. Guys, happy Friday. It's good to have you both.
Thank you.
Thanks, Carl.
Toni, let me begin with you. It sounds like you don't mind paying a premium for Apple because of the ecosystem and the franchise, but you think there are other companies with better growth and margin profiles.
Absolutely. So Apple is an incredible company, an incredible brand with a great ecosystem, and it deserves a premium multiple to the marketplace. That said, when you compare it against, other mega cap tech stocks, it has much more modest growth. Last year, it barely grew its top line. This year, we expect revenue growth to be less than 1%. And you're paying about 28 or 29 times earnings. For that multiple, you can buy Microsoft or Amazon, which have double-digit top-line growth rates. And ultimately, I think as good a company as Apple is, I'm not sure at this valuation it's particularly compelling.
Is there any weight to the argument that, I don't know, let's just pick Vision Pro and first new category in almost a decade, that there might be a resurgence in growth just around the corner?
I think in the near term, Vision Pro is not likely to be a needle mover for Apple. It's a $3,500 product, even if it sold 1 million units, which is sort of what production volumes look like. That's $3.5 billion. That's less than 1% of Apple's revenues. Certainly longer term, this could become a significant category. We'll have to see how much of it is incremental versus cannibalistic to consumer spending on things like iPhones or iPads. But ultimately, in the near term, at this kind of price point, it isn't going to be a mass market product or a needle mover for Apple.
Brent, I mean, Microsoft certainly kind of the consensus favorite, just being in the right place across many technology areas, obviously with the AI kicker as Copilot comes around. What do you say to an investor about why now, after we know all this and we've had the good news embraced, does it still represent a good value?
I like the parallel with Apple. Think about Apple. Was a consensus long when iPhone came out 15 years ago? Over the last 15 years, there's been a massive amount of cash flow that Apple had accrued based on that first mover advantage in the smartphone that they created. That's the point in time we are now with Microsoft now. There are very few $200 billion businesses growing double digits. Microsoft is at the point now where you could probably make an argument growth could accelerate even at 10 billion. And we're thinking about an AI business that's well-known, consensus, but only 1% of revenue, about $2 billion AI business for Microsoft today. We think it'll be north of 10 billion within 2 years. And we think it's the next $100 billion opportunity for Microsoft. So yes, it's consensus, similar to Apple back in 15 years ago. But we're at the beginning of this AI cycle. We're certainly not at the mid-cycle of a device or of a tech cycle. So we're very bullish around the long-term prospects for Microsoft. We're pretty bullish around the near-term prospects given AI and how quickly it's moving.
I'm not sure if Apple was quite the consensus long we think in retrospect it was when iPhone came out. People thought that thing might flop, although I guess I would ask you, at this point, when Microsoft has already gotten to $2.8 trillion, I mean, where are they pulling the revenues from? Are there net losers in the tech ecosystem that are not going to be, they're going to have to forego revenue because it's going to Microsoft?
Sure. I think you have to think about the two drivers of AI that Microsoft can capitalize on. One of those is going to be incremental revenue, and we talked about this being a $2 billion business. The other is really driving down costs, right, and lowering costs for enterprises. If you just think about Harsh Kumar, our semiconductor analyst, and he covers NVIDIA, they'll do about 15 billion of GPU sales this year. In the next 2 years, they're going to do over 100 billion is what his forecast is. That's a massive amount of data that needs to be trained on these systems, massive amount of GPU capacity. That's the opportunity that Microsoft's sitting in front of, capitalizing, both driving incremental revenue for the company, incremental cash flow for the company, but also driving down costs for those enterprises to basically be more efficient. So this is the beginning of a big productivity wave. That's the real incremental value. It's not just the incremental revenue, but also driving value to the end market, making those employees more efficient, making businesses more efficient.